Okay, so we're going to continue with the budget analysis and budget information. And this week, the dynamic is going to be a little bit different than previous week, because previous week was more like an introduction of sorts. So we saw a lot of content. We did some activities, but they were like really easy, simple activities just for you guys to review and identify better the financial statements and review the cash flow statements. Why is that we did that? Well, the reason is because we are gonna end up with a budgeted income statement, cash flow, and also cash flow. So the first class and the first week was for you guys to remember how to do that and work on building the cash flow, because that's the basis for the budget. All right. So that's why we did that last week. Now we're gonna be working on building the budget. So today I'm going to work with you guys. We're going to define what the master budget is. I mean, we already did it last class, like in some sorts. I told you what was the master budget, but we are going to see it now in detail, the parts of the master budget. Then we are going to analyze the operating budget, and we're going to start building the operating budget and the financial budget. All of this in this week. The idea is that this week we end up with all the information to build the budget. So in the class activities, we are going to be working on building the budget, and the homework for the week, that is the homework I'm going to leave you during the weekend on Friday for you to work for Monday, is to complete the information that you don't finish completing on the class. For example, if in the class we do a budget of production for product Y and you didn't do, and you missed the product X, that's what you're going to be working during the weekend, and that's what you're going to be delivering on Monday. And that's what we're going to do. Again, we're going to work, and what is going to be, how is going to be the dynamic being in the class? Well, I'm going to explain you the concepts, show you an example. Then we're gonna do breakout rooms, and in the breakout rooms, I want one of you to share his or her screen to try and work on what we just on what we've been reviewing, on what we're going to be reviewing. All right. So if we review the sales budget, and I show you an example in the PowerPoint, and I tell you, well, this is how you build a sales budget, and I show you the formulas and everything. Then we're gonna go to the breakout rooms. I'm gonna be visiting each breakout room to just clear doubts and ask some questions for you guys to start like working on the competencies from the class. But the idea is that one of you shares his or her screen to show like to the other classmates how you are gonna be how to work on that. Try and solve it. That's what I'm trying to say. Try and solve the budgets on each breakout room. And my recommendation will be that not always the same person shares his or her screen, because that's going to be great for the person sharing all the time his screen or her screen, but the other people are not going to be learning that much. And this is a learning opportunity, because now you are going to be practicing, and you're going to be teaching what you're practicing, like to your classmates inside your breakout room. So it's going to help you if you share your screen to better comprehend what we are doing, and actually have an easier time working on the homework for the next week. Okay. So that's going to be the dynamic. We're going to do that today. We're going to work like that also on Friday, and on Monday it's going to be a review session to work on the financial statements. Okay. So why is that? Well, because after this class, let me just take this out. After this class, then the 13th, and then the 17th, the next 2 weeks are going to be for financial planning. And for financial planning, we actually need to have the financial statements already in place. So that's why it's budget, these 2 classes, homework about the budget, and then the financial statements building, like the build on the financial statements, and then you're going to start working on financial planning. Okay. So the Monday class is gonna be like that, the transition class between Karina and I. So let's start the class with the content. And as I was telling you, last class we reviewed the master budget. And I was telling you that in the master budget, you have three separate budgets. You have the operating budget, the investment budget, and the cash budget. And then I asked you, I told you, actually, I told you that each of these budgets is related with a financial statement. And then I asked you, which financial statement do you think is related to which type of budget? And all of you actually understood perfectly, the people who actually participated, because you told me that the operating budget is the P&L or income statement, the investment budget is the balance sheet, and the cash budget is the cash flow. And then I told you that these two, the balance sheet, and I mean the cash budget and the investment budget, are marked for a reason. And the reason is because these two are part of what is known as financial budget. And it's important that you know that, because if you look for information on the internet about budgeting, you will find a lot of articles talking about the operating budget and the financial budget. So you may ask yourself, well, where is the investment and cash budget? Well, they are inside the financial budget. So that's the general comment here. So let's move now to like talk about into like go into more detail into these three types of budget. Let's start with the operating budget. And I'm gonna ask you, please open your microphones and tell me and tell me, what do you think goes inside the operating budget, the operating budget?
Everything needed to produce.
Everything needed to produce, which will be called what, Alejandro?
Production costs.
Production cost. Yes, perfect. What else do you think? For example, I don't know, Carla, Constanza, Eduardo, Elliot, Fernando, Jesús, Juan Pablo.
Teacher, I'm not sure, but just a question: would sales expenses would be included?
What was the question?
What do you think is included inside the operating budget? Who was speaking? Sorry, before
me. It was a question. If
It says what was the question?
Expenses.
The question was, what do you think is inside the operating budget? And it was you, right, Roberto, who was speaking?
Yes.
So
if I don't know if sales and administrative expenses.
Yes, sales and administrative expenses will be part of the operating budget because they are part of the income statement. You're absolutely right.
Maybe depreciation as well, because it's used daily.
Share the joke.
Roberto.
Show us the meme.
All of your operated activities, like accounts payables, accounts receivables.
Well, that actually will be inside the cash flow budget and the balance sheet, the investment and the balance sheet. Sorry. Why? Because those have to do with your collection of cash. Okay.
Mm-hmm.
Here you will see operating expenses, cost production expenses. I think it was Alejandro who said that cost will be inside there. At the end is everything related with the production and operation of the business. So you have income expenses and you have cost expenses. And again, it's all what is related with the profit and loss. All right. So building the operating budget, well, you start from the sales budget and then you build from that. So why is that? Well, because the sales are the integral part of the business. If you are not selling anything, then you cannot operate, because how are you going to build the products you are going to be selling if you don't sell anything, right? So that's why it's the starting point of any budgeting process. And the operating budget can be divided in different accounts like sales, wages, dividends, costs. And again, there are the accounts inside the profit and loss, all right? And it holds support information. Like, for example, it will show you, or when you are starting the budget for building the operating budget, you will have support information like unit cost or head counts or production capacity. All of that will be inside or will be part of the information to create the operating budget. So again, question for the guys that did the homework, when you in the case scenario, do you support information for the operating budget, Again, question for everyone. Reading the case and working on the homework, did you find support information of the examples I just gave you for the operating budget?
Yes, we had unit cost and wages per unit.
Cost. Exactly.
Labor cost per unit.
Nice. Yes. Someone else wants to say something? Thank you, Alejandro.
Also, we had sales price and cost of sales in commissions.
Yes. So there was a lot of information that wasn't like, thank you, Elliot, like showed to you like in quarters terms. It was like, this is going to be the price for the products, or this is going to be the unit cost for the raw materials. All right. So that is support information for the operating budget. Okay, the next type of budget is the investment budget. And before I explain you what is inside the investments budget, what do you think goes inside the investment budget? This is a question for everyone. It's a question for
maybe the equipment required to produce.
Yes, the equipment required to produce.
For property, plant, and equipment investments.
Capital expenditures.
Capital expenditures. Yes, all of you are correct. The right terminology to refer to investment budget, it's capital expenditure or CapEx. So there are special requirements of capital, and that is, for example, if you are going to invest in a new machinery for the company, then you do a budget on CapEx, and the investment on that machinery is going to be inside your investment budget. And it doesn't have to do only with buying new machines. It could be also the maintenance of machinery, and when those maintenance costs are actually quite high, you include them inside the investment budget. And really important point is that when you do investment inside a business for CapEx, it's because you are expecting future positive cash flows. So that makes this a really specific analysis, and it's mostly driven by the managerial level. For example, when I used to work when I was a cost accountant, the general cost accountant, what I used to work with the treasury department to work and build the CapEx budget, because we had to buy this really expensive firewall software each year. It was like $7 million, something like that. And we have to buy that every year. And it wasn't a license. It was like actually new software that we needed to register as intangible assets. And I remember that the operating, like the infrastructure director will present like the proposal to the treasury department. And then I will actually work on that. Like being the cost manager, I will have to just check the cost related with the financing of that asset. And then my boss, who was the CFO, will take that information to the board of directors, and then they will take the decision. He will go to the board and actually present different options. You know, like I remember the two biggest vendors of that type of product was Red Hat, for example. Microsoft was the other one, and we couldn't just up front just pay for that software. We needed to finance the software. So what we did was actually get into financing with IBM or HP. Those two actually computer companies, what I realized working there is that one part, like huge part of their business is that they lend, like they do this thing called leasing, you know, like financing leasing to software and technological companies. So what they do is like they buy the software and then they lease it to you with interest. So we actually we will prepare the proposals and then take them to the board, and then the board will say, okay, let's go to IBM, and that's how will be we will plan the CapEx, the investment budget. And just a quick question, just to see if you are paying attention or not. If I go and ask for financing to then invest it in CapEx, the first inflow of cash, right? From what type of cash operations comes from? And I will reformulate it again. Please, this is a question for everyone. If I ask for a loan for financing, to then use that money to invest in CapEx, investment, capital invest inside my investment budget, from where, what is the name of the activities that are generating that positive cash flow, that inflow of cash inside my bank account?
Oh, I was gonna say that it probably gonna increase the banks and the equity, right?
Well, the banks, yes, but my question is thinking about last week when we were working on the cash flow. What will be the name of that cash activity?
Investing activities.
Is it the inflow of cash for loans? Because I go to the board.
Financing activities.
Financing activities, exactly. And tell me, Carla, because you already said it, then I take the money from financing activities and then I spend it on investment. I have an outflow of money for the investment budget. What would be the name of those activities?
The recipient of the loan would be financing, and the investment would be shown as an investment activity.
Exactly, you are absolutely correct. Thank you. So that will be the investment budget. Note that the investment budget, it's part of the financial budget. Again, because it's really, actually, this budget is actually pretty easy to find. You will find it just like, we need to buy this, and the management approves. That will be your budget. So next is the cash budget. And before I tell you what goes inside, what do you think goes? Well, sorry. Did you find any investment budget or capex budget inside your business case scenario?
Yes.
Yes.
There was plans for the acquisition of fixed assets covered in cash.
Perfect. You all found that?
Yes.
Most of you, I'm guessing. So cash budget. What do you think goes inside cash budget?
All the ins and outs of the money.
Ins and outs of the money. Exactly. It's actually pretty simple. It's the money that goes inside the company and money that goes outside the company. So what you do in the cash budget, you detail the explanation of inflows and outflows of cash from out of the company and inside the company. All right, so it's actually built after you have the other two budgets completed, because you need the information from operations and also the information from investments to know how much cash you're going to be needing for each period projected. And it actually helps to find unproductive cash usages. That is, it helps you to plan a more structured, efficient business when you do the cash budget, because you can maybe project a few months in the future, and then you see maybe in the first months that you have like a bunch of cash on balance in your cash budget. So you may think, well, if I have all this money here, it means that I'm not using it for anything. So maybe I could just reinvest it in the company, invest it maybe on this cash, on this capex, and then that will generate future cash flows. Or maybe I can take it to operating activities and maybe buy more raw materials to produce more, and then try and sell more of it. Basically, it's the money coming in and outside the company. It's not difficult. But what you need actually is the information from the operating budget and the investment budget, and then you need support information, like how much money do you collect from the sales, and how much money you pay to the vendors each period. And again, did you find like the information to build the cash budget inside the project case scenario? If you did, could you tell me like an example of information? Open question. Okay, so Majo, Lilian, Juan Pablo, María Georgina, María Martínez, Nayeli, Pablo Peón, Roberto, Sebastián Val. Who else?
Christopher, I lost you in a part where you asked the question.
Yeah, me too.
Like I
So
couldn't hear you.
the question was, did you find any information related to the cash budget inside the problem case scenario?
For this one, I'm not sure.
I think
Yes, I remember that
that they needed to maintain a minimum cash of 8,000.
Okay, that is information for the cash flow. You are correct. What else? Elliot asked something at the beginning of the class.
In a part said that purchases were like paid after a quarter.
Were paid in the same quarter, right? I think it was like that.
No, one after, wasn't it?
purchases are made in the quarter after,
Yeah.
and the sales is 70% in the same quarter and 30% in the next.
I'm sorry, yes, it's that. Well, Elliot has it. Actually, he had the question that like, well, I don't know what is receivable and what I'm paying or anything. Well, that is the information for the cash flow. All right?
Yes.
Okay, perfect. So I think you all have it, most of you. So what are we going to be working? We're going to work on the budget for a manufacturing company. So this is the operating budget, all right? This is the budgeted income statement or profit and loss, okay? And here you have the financial budget, and inside you have the cash and the capital expenditures budget or investment budget. And here you have the balance sheet, the budgeted balance sheet. This will be pro forma, all right? That is, they are not reports. They are budgets and projections, okay? So that's the integration of the budgets. At the end, what you do is you build you build financial statements with them so you can apply financial analysis to the information you are building. And retaking what I was telling you before, the basis of all the budgets is the sales budget. Well, what is that? And I want to ask you if you remember for other classes this graph. And here we have time, and here we have money. And then you have this being the fixed cost. Then you have something like that being the variable cost. And then you have something like this being the sales. Right? So if you remember this, that's a regression of the lines of fixed cost, variable cost, and sales to see which of the lines inside the income statements it's a fixed cost or a variable cost. And the reason why I'm telling you to remember this, it's because, I am asking you to, if you remember, it's because if you remember, the variable cost moves as a function of the sales. And actually the fixed cost in the long term also moves as a function of the sales. For example, if you have, like, let's say that these are year 1, year 2, and year 3, and these are your sales. And it turns out that in year 1, you have an office for 2 people, and then you need an office for 6 people, and then maybe you need an office for 50 people. Well, even though it's going to be fixed during the year, the fixed cost will increase following the sales, and then it will remain constant, okay? So it also follows an upward tendency as a function of the sales in the long term. So you could make the case that all the costs at the end in the long term are actually variable costs. And why is that important to reckon here? Well, because if you consider in your projection that all the costs are variable costs in the long term, then you can actually build everything as a function of the sales. And if you build everything as a function of the sales, then you can set goals and have those goals linked to the cost and actually profits of the business. So you start with the sales budget, and from the sales budget, you get the production budget, and from there, you get these three squares here. That is the raw materials, the labor cost, and the overhead cost. So, question for everyone, and I don't know if you are following me in the class, because you just told me that my voice is being cut, but just tell me if you are listening to me. You are listening to me, and
Yeah.
answer. Yeah. Okay. So my question is: these three things. What is the name of these three things here? The raw materials, the labor cost, and the overhead expense.
Cost of goods sold.
Cost of goods sold. Yes, that's the addition of these three will give you the cost of goods sold. But my question is, like, technically, what is the name they receive, like in cost accounting and corporate finance?
Direct cost?
Well, you can have direct and indirect cost inside these three. Would these three have a name? Like, you remember your what was the name of that class? I don't know if I gave it to you. Some of you, Dirección Financiera. Maybe you remember them as materia prima, mano de obra, gastos indirectos de fabricación. That's in Spanish. Production cost, says Roberto. Well, yeah, there's production cost. But the technical name of these things, it thinks it's cost elements. There are the three basic cost elements, all right? And of course, you need to work on them when you are doing a budget. So we're gonna be reviewing, well, not reviewing because I'm not gonna teach you again how to identify these three elements and how to work with them. We're gonna be working with them to build the operating budget. So anyway, once you have that, then you can work on the cost of goods sold. And again, from the sales, you determine a selling and administrative budget. And this budget is more like a given data. They tell you to sell this, I need this budget, this money, right? And that's how you get it. That's actually how you get it in real life. And they just, these departments, cost units, gives you the information and you budget with that. And then what you do, because it's like a fixed budget, you check on them. If they go over the budget, why that happened, and then you restrict their activities. Well, once you have all of that, what you end up with is the income statement, the budgeted income statement. So let's write the income statement here, the profit and loss, so you guys can see how this information will turn inside to the income statement. So you will start with sales. Then you have the cost elements here as cost of goods sold. That will give you the margin, right? Or gross profit. Then you have the operating expenses here. Let's put it. That's gonna give you the operating profit or EBITDA. Minus tax, interest, and depreciation that you didn't include as the cost will give you the net profit. Okay, so this is your income statement, and what we need to end up to the next week is actually with this statement, the financial statement. So this week we're going to be working on all these budgets, and for the next week we need to have that finished so we can build the financial statements. Okay. Okay, so that's the general picture of what we are going to be reviewing. Now let's start seeing each budget individually. So we're going to start with the sales budget, and the sales budget begins by estimating the volume of sales. So you start with a volume of sales, and from that you just evaluate that volume of sales. How do you determine that volume? Well, you usually generally you will use like the previous year's sales as a starting point, and then if you have like sales plans, like sales objectives that you want to reach as growth, you include that growth inside your sales volume estimate. And well, these quantities, as we are starting with the sales budget, and the sales budget is going to drive all the budget, it can help you to plan advertise, promotion, to plan also price changes, and also to plan and wait for expected industry and economic conditions. And I asked you guys, for what other type of planning do you think you can use the sales estimate?
If you're going to do like an investment, like buying, I don't know, opening another plant or something like that.
Okay, that's good. You can actually see that because you will look for the maybe sales budget per region, right? And if you see a region that has like an increased sales expectancy to increase on sales, then you will open a new facility there or store, right, Lilian? That's what you mean?
Yeah.
Well, yeah, that's actually really good. Okay, thank you, Lilian. So how do you actually budget sales? It's pretty simple. You get your expected sales volume and then you just multiply by the sales price, right? That's how you get your budgeted revenue. Let's see an example. We have a business that manufactures wallets and bags, and then we have these two estimates per region and per product, and we have this price sales. So how is it going to work? We're just gonna take the estimate, is this one, you can see that is this one, okay? And we're gonna multiply by the sales price, and the sales price in this case is 12. So you can find that one here, okay? So that will give you this result. You do that with all the volume of sales, you know, multiplication and result, and then that addition is gonna be your sales budget, all right? Really easy, it doesn't have any science on it. So, do you guys have any question? Because next part is I'm gonna do the breakout rooms and you need to build this for the important case scenario. And before we move to that, I'm gonna show you my answer because I'm gonna show you two things. I did the answer twice. The first time I did it like this, like on horizontal, no, that is vertical columns, I'm sorry. And I build it like this, I just copy pasted the information. And then I realized when I was working on the financial statements that it was a mess to build the financial statements with the information like this, okay? So I rebuilt the information as horizontal tables, okay? And doing this, I had a much easier time working on the financial statements. So my recommendation to you guys is that you build all your tables horizontally, looking to show the expenditure for each of the budget we're going to be working. You can also do it like this. I did it the first time, but I have to tell you, it took a lot of time for me to actually get it right, like to get this and move it to the financial statements. So please, general note, don't do that. Work it as horizontal information, okay? Like when you see that you're going to be working on quarters, just put it on this horizontally so you don't have a hard time when we build the financial statements. Okay, so let's do the breakout rooms. And before I go to the breakout rooms, I want to say like a general comment. Please don't wait to the class recording to actually work on this information, because as you can see, my internet is failing, and also I need to edit the videos, and then I need to upload them, and that takes me like a day. And when it's the weekend, it's gonna take me the weekend plus 1 day. So if you wait for the class recording to be there to actually pay attention, you're gonna have a hard time working on these activities. And the class recordings and also the presentations are supposed to be support information for the classes. So if you are in the class, please ask questions. Don't wait for only the class recording, because it's gonna take me a while to do that, to record the class. And also, for example, I had another class where something happened with Zoom and we lost like an hour of the class. I couldn't record that. So the class recording is only like 20 minutes of questions, all right? And that was nothing I could do with that. It just, Zoom didn't record, okay? So if you are in the class, please ask questions, try and participate now in the breakout rooms so you can understand the concepts. And again, I tell you, I do not recommend to wait for the class recording. Something can happen and you may not have a class recording, and it's only supposed to be support information. Okay, so let's create the breakout rooms.
Sure. In this exercise, now we have to move the income month to month and receivables and all that.
No, only the sales, like what we just saw in the example. Okay, so it's
Okay.
just the sales for each period.
Okay.
So guys, so I'm sorry, I just realized I did a lot of rooms, so I'm gonna do it again, okay?
Okay.
Because I won't be able to visit all the rooms if I had 7 rooms. So I'm gonna have
Teacher, I have a question. For the sales budget, do we have to subtract the sales cost, like the sales commission that is mentioned in the case?
No. Only the sales. We are working on the first part of the income statement as I show you.
Okay.
So
Yes.
it's only the sales. Just work on the sales. Don't do like anything. Just as I show you, just multiply units times the sales price. Okay.
Oh yes, of course. Okay.
Okay, so I'm going to recreate the rooms. Now I have less. Okay. So I'm gonna have rooms. Okay. That's better. Okay, now let's go.
Bro,
Mande, Val.
Es que me sacó del Zoom.
A ver. Listo.
Igual creo que se enojó.
A ver.
Y a ver, pregúntale si se enojó. Prof, ¿te enojaste?
Estoy enojadísimo. Pateo de madre. I'm more offended than angry, but that's okay. No, while you show your screen, please. Whoever is gonna share.
Híjole, majo.
Ya, qué pena. La cosa es que yo lo acomodé tantito distinto porque lo quería tener todo en una misma tabla, pero no sé.
No, actually, I wasn't talking about your homework when I said that some of you did something that I don't understand at all. I mean, I don't want to say who did it, but No, yours is not the homework I was referring to.
So what homework was?
Well, I cannot say because I don't know. I don't think some of you want to be in this
But
life actually.
yeah,
But anyway, yours. If it works for you, okay. I gave you like that a structure because it's gonna be easier for you to build the budgets. All right. If you, I mean, I can see you have all the information there. I can see the sales and I can see the prices. That is there. What I can tell you from right now, you are gonna have a hard time working on the financial statements.
Because it's
Okay.
vertical or what?
Because it's what?
Vertical?
No, because she has, like, for example, in the first one, the F column, it's like the Y, and then you have the E column being the X, right? And then you have it separated, and you need to represent that information integrated in one sales account. So you're gonna have to add up each one of those cells individually. You won't be able to just drag the formula to the right. So you have the information. If it works for you, it's okay. But remember, you need to build financial statements.
Okay.
So if you do it like that, and then you build your financial statements, and you are happy working, like adding up each individual cell every time, I mean, it's okay with me as long as you build your budgets.
Okay.
Okay, so you just want to put us like in sales and then total sales for every period, and that's it.
Yes, for this one, yes.
Oh, okay.
Okay. So, and I'm not, I mean, I am angry because, well, not angry with, I mean, it was a really easy homework. I don't know why some of you just didn't even do it. But anyway, so I don't know if one of you, for example, maybe Elliot, I hope, did you already did the budget, the sales budget, so you can show us?
Yes.
And show your classmates?
Yeah, let me open it. Yes, mine is like this. Here I put unit sold, and then here is the price.
Okay.
And here is income for each product, and then here's the total. So what I wanted to do, because of what you said, is just to put here just total sales or sales. And now this is this.
Yeah, that will be it. And that's easier, you see? And now you have the sales line for the income statement.
Yeah.
And again, we are not going to work already on the income statement, but I am telling you what you are going to be doing for homework and later for the next week. So as you can, as all of you can see, Elliot's format, it's easier to work when you need to do the income statement. Okay? Good job.
Okay.
Hello.
Hi, Christopher.
So who is showing the screen?
We already finished. Juan Pablo was sharing.
Okay.
Yep. So we got 324,000.
Yeah, really easy, right?
Yes.
Okay,
Yeah,
so
quick.
I don't know if one of you actually called me because had a question. What was the question?
Oh, I called you. We were wondering if that was like it.
Yeah, that's it. And it's pretty easy, right?
Yeah, okay.
Okay, thank you.
Thank you.
Pongas en vez de, perdón. En vez de aquí poner el 6, que le pongas igual y te vayas a la info y agarres el 6.
Okay.
Solo por si cambia en algún momento que cambie todo.
Okay.
That's a great tip, Maria.
Thanks.
So,
right?
What? I'm sorry?
Are we doing it right?
Well, you are, but again, you are doing it vertical and you can do it. I did it like that the first time, but it's going to be hard for you then to work on the financial statements.
Okay, so
Horizontal.
would it be?
I'm going to show you the answer when we go back to the main room, so don't worry.
Okay.
What I want you guys to do is try and do it. And the formula is quite simple. Just multiply the selling price times the volume of sales for each quarter.
Uh-huh.
And that's
But do you want it, can we do it in total or do we have to do it by each quarter?
You need to do it by each quarter because you need to deliver information. That is a budget for each quarter.
Okay, okay.
You do it in total, you're only going to have information from the by the complete year, yes, but you won't be able to compare quarters.
Okay.
Okay. So I don't know if you guys got it. I think you did. You just didn't show the answer now. But if you don't have any questions, we're gonna return to the main room and I'm gonna show you what I did. Okay.
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 Thank you, teacher.
You're welcome.
Yeah.
Okay, guys. So I think all of you got it right. And again, I'm gonna show you again the look. I did it 2 times. I did it vertical and then I did it horizontally. And the reason why I changed it to horizontally is because it is easier for me now. And also if you do it like that, it's gonna be easier to build the financial statements, okay? So let's first see what you need to do. All you need to do is just take the sales price and multiply by the volume of sales, okay? Hello.
Hi.
So I think you all guys did it correctly. I mean, you had different formats. That's okay. If you want to work with those formats, it's okay. But I'm going to show you that I did it like that. I did it horizontally, just copy pasted the information, and then I had a really hard time working on the on the income statements and the balance sheet. You know, working on the financial statements was actually quite hard. Okay. Then I redid the case and I did it horizontally, all my tables horizontally. And now for me, it's easier for me to build this because all I need to do is just direct it to the first one and then just drag the information to the right and it's done. I finished my income statement. It's only a recommendation. If you want to do it like that because you like it or you want other format, it's okay with me. All what I'm gonna be grading when you deliver when you do the delivery of the case I'm sorry, it's this spreadsheet of the workshop, all right, of the workbook. So that's why I'm telling you to do it like this, but it doesn't mean that you cannot do it other way. I mean, you can do it how you want to do it. Just remember, you are gonna need to deliver financial statements. So how I did this part is just multiply the price times the volume of sales, okay? And again, if you have everything formulated and on the same type of tables, all you need to do is just drag the formula to the right, and that will be all what you need to do, okay? And you will be happy. And you have the information done, right? So I think you will go to that. Do you have any questions?
No, teacher.
No, teacher.
No, teachers, thanks.
Okay, so let's continue with the next part of the budget. So let me share. Okay, it's there. Okay, so next part of the budget is the production budget. And this one is a bit tricky, so pay a lot of attention, please. So the production budget is actually how much, it's the estimation of production that you're gonna have for each period of the budget. How is that determined? Well, you start with the units for sales that you have, that is the volume of sales that you got from the sales budget. Then you take the units planned for final inventory inside the table. You add these two up, and those are the units you need for that period. That is the units you need to be sold and the units you need to have on your final inventory. And then you subtract the initial inventory because you don't need to produce that. You already have it, all right? So you subtract that from the units that you need, and the result is gonna be the units that you need to produce, okay? So it's the volume of sales, right, plus the final inventory minus the initial inventory. And this is of production, okay? Or finished goods.
All these, the inventories are in the case?
Yes, actually my next question is, where can you find these inventories inside the case?
Well, there was a paragraph that mentioned that they had they produced too much or something like that, right?
I'm sorry, that's in Spanish. Monarca.
Well, maybe in the balance sheet, there's you can find the inventories.
You can remember we are budgeting. So when you do the budget, what you do is you collect the information from the like specialists, like the directors and managers and all of that. So if you go to your program case scenario, here you have a bunch of paragraphs that are actually talking about inventory. You see?
Teacher,
Yes.
I have a doubt because in the
This is in Korea, actually. It's
paragraph,
2021.
yeah, that's my question.
Okay,
It was,
so change that, please. It's all 2021.
okay, thank you.
Okay, so who was speaking, sorry?
Maria.
Okay, other than Maria, did you all guys found the inventories inside the case?
Yes, teacher.
Yes, teacher.
Okay, so that's the information you need to work on this part. And again, I have it here on my, I'm sorry. I have it here on my answer already. And I have it like this because I'm gonna work it per period, okay? And I'm gonna do it each period because I need the information for each period. So let's see it with data, all right? So the same company we're working for the examples, we have an estimated inventory at January and we have a desired inventory at December. This will be our initial inventory. And this will be our ending inventory. Okay? So let's put inside the formula. And we start with the information of sales, the volume of sales that we have. Okay, so this is the sales budget, this is the volume, and we start with those values. They are here and here, okay? Then we need to add the desired inventory. That is the final inventory. The ending inventory, I'm sorry. So the ending inventory is the one of December. So it's 80 and 60. It's this one here, and actually let me use another color so you guys don't get confused. So this one and this one go here, okay? The addition of these two is the total units available, okay? So that's here, that's the total units available. Those are the units that I need, right, for sales and also to hold as inventory. And the units that I'm going to produce are going to be the difference between those units that I need and the units that I already have as initial inventory. Because I already have these units, I don't need to produce them. So I subtract them. Okay? The result is going to be the total units to be produced. So you need to work, think of this as product X and this as product Y. And you need to build this for each of the quarters, okay?
But I have a question. Why in the estimated beginning inventory are they negative?
Because you are subtracting it.
Okay.
So it's negative, well, because if you add them up, it's 520. If this were to be positive, you just need to subtract it.
Okay.
So it will be the same as saying 680 minus 88. Instead, because this is information from finance, what you will find is the 88 between, I forgot what these things are called.
Okay, thank you.
I don't remember what these things are called. These things here, I'm sorry.
Parentheses?
Parentheses, yes. I'm sorry. I also forgot the word in Spanish. What the hell? So when you are doing finance, you will find the negative values inside parentheses. Okay. So that's only okay. So it's clear how you need to do it, right? Let me show you my Excel so you know how I did it, and maybe it's gonna be easy for you guys to understand. So I'm gonna only to show you this one, okay? These are here you need to build. And also I only want to show you for product X, you need to build all product Y. So we start with the units forecasted to sell. So if I go up, you can see that because I have all my information assembled like in the same time frame, I just need to go up and there is the information, right? So I start with the units, the expected units to be sold, okay? That's there. Then I need my ending finished goods. And if you remember inside the case, it says that it is required to produce, the required ending inventory for each period is expected to be a quarter of the next units expected to be sold, okay? That's actually in paragraph number 14. So what I'm going to do is just multiply this one by the sales, expected sales for the next period. So I'm gonna do that. That's that. Then I need my initial inventory, and my initial inventory actually comes for also paragraph 15, and that's a given data value. I'm sorry, that's a given value. So I have the 2000 as initial inventory. So these two are the products that I have, that I need. I'm sorry, these are the products that I need for this period. That is 4,000 to be sold and 2,000 to stay as ascending inventory. So how do I get to the total period production? All I need to do is just subtract these two, okay? You may maybe question me now, why, well, teacher, why isn't this number negative? Well, I did it like this, so I just need to drag the formula this way, and that will be it. And just check that the next initial inventory for each period, it's gonna be the previous ending inventory. So you're gonna have something like this, okay? And the last one, as you don't have forecasted sales, you actually have this as a value because they told us that the ending value is for X products, it's X, okay? So that's how you build it.
Teacher,
right.
I think you were a little bit fast because I couldn't get so much of what you said.
Okay, so I'm gonna say it again, right? I'm gonna apply the formula inside the first quarter, okay? So the first thing I need are the unit sales forecast. So I go up to my table and I take that because I'm working on product X, okay? So that's clear, right?
Yes, thanks.
Next thing that I need, according with this formula here, it's the final inventory I expect to have. And if I remember, I read the case, and in the case of paragraph 14, it tells me that he added that ideally the ending inventory of finished products at the end of each of the first 3 quarters will be equal to the quarter to a quarter of the sales forecast for the following quarter in each model. So that means that I need to multiply 25%, and I fix that cell, by the sales forecast of the next period. And I'm gonna do it like this because all I need to do is just drag my cells like this, and I have it already completed, okay? So that's good. And I added this total because I want to have like a step in between these two to know how much products do I need, okay? But if you go to the table, you don't need to add it. If you don't want, you just can subtract it from here and you will get to the same result. But I did it because it's easier to understand what I'm doing if I do that. So I have that there, and then the formula says that I need to subtract this, and this can be either negative or you can subtract it in the formula. And because I don't want to have negative values in my table, I'm just gonna put it as positive and I'm gonna subtract it in the formula. And I say, and it says there that I need to put here the initial inventory that I have because I don't need to produce that. I already have it. So I go up and again, this information that was given to me, and I have it here on paragraph 15 on this table. And there I have the inventory that I started with. So next part is I need to subtract the unit sales, the unit plan, I'm sorry, for final inventory. To that, I need to subtract the unit estimate for initial inventory. All right, so I go here and then I subtract that one. And what I end up with, it's the units produced. I need to produce in this quarter. So is that clear?
Yes.
Yes.
Are you sure, Elliot? I think it was you asked me. No, it was
Yeah,
Pablo.
yes. No, it was me, but now it's clear.
So it's clear? Okay. So you may be thinking, what I need to do now is just drag this to the right and that will be it. And well, no, it's not that simple because you need to change something in these two quarters. And the first thing is that you need to know that the initial inventory for the next quarter is actually the ending inventory from the previous quarter. So we change that and then we drag the formula. You see, pretty easy. Just it's logic, right? The inventory that I ended up in the previous quarter is the inventory I start with in the next quarter. That's it. I'm sorry. And then the final one, well, we don't have forecast sales for the next year after the budgeted year. So what we do is actually we ask to the plant manager, and he told us that the ending finishing units are going to be 4,000 at the end of the period. So we just need to take that value there and there. We just have our total period production budget. It's this one here. Okay? So I'm gonna go ahead. Well, before I finish, do you have any questions?
Teacher, this is for the initial estimation.
What?
Like inventory, is the initial only.
In the first quarter, yes.
Okay.
Trimester. Okay, so I think everything's clear. So let's go to the breakout rooms and please try and ask other person to share his screen or her screen. Okay.
O sea, de las unidades, más que del precio.
Ah, ok, entonces me quedo con este. O sea, de estas unidades, ¿no?
Ándale.
Ajá. Entonces hago otra tablita aquí a la derecha.
Sí, donde te acomode.
Ajá. ¿Y qué le pongo?
Pones cuántas quieren vender en cada quarter. Después pones cuántas quieres que le sobren.
Luego, ending finished goods es...
¿Me oye bien, Geo? Se me está desconectando el micrófono.
Sí, ¿por qué?
No sé, solo me salió que ya no podía hablar y como, a ver.
Sorry, maybe it's because I joined.
No, teacher, it's a problem with my microphone, don't worry.
Okay. Let's continue. If you have any questions, I'm here.
Yes, thank you, teacher.
Sí. Thank you.
A ver, entonces,
Primero ponemos el de diciembre, ¿no?
¿en qué parte vas?
En lo de ending finished goods.
Ahí creo que iban...
Luego, units estimated from initial inventory, ¿qué pusiste ahí?
Viene del pasado. O sea, bueno, primero te dicen el caso que viene en 2000 y los que siguen es el final del pasado. O sea, este periodo tiene el final del pasado.
Ok.
Igual para este.
Pues ya está, ¿no? Literal era eso.
So you are doing good, guys. I see.
Yes.
Yes. Okay. So just let me see my.
Teacher, I just
Excel.
have one question.
Uh-huh.
In the case it says like the last period should be 4,000, do we divide it by 4 or do we just keep the 4,000?
No, it's 4,000 because it's actually a balance. So it's the last period balance. So it's okay to put the 4,000. There is some expenses that are actually listed as the year expenses. And in there, you do have to divide. That's going to be like the end, like the last thing we do.
Okay.
So, okay. Okay, I think all of you did it correctly. We're going to go back to the main room and keep working on the next part, okay?
Okay.
Se corrieron como años.
Ajá.
So, how you guys
Bueno,
are doing here?
estos, es que este 2000, ¿siempre va a ser 2000 aquí, en esto?
No, va cambiando.
¿Este qué tiene que ser? ¿Igual a, o cuál es la fórmula de este?
¿Para cuál?
Para
Ese
este.
es un cuarto del 8000 de arriba. O sea, te vas al segundo cuarto y el valor de, ¿cómo se llama? De los unit sales del próximo cuarto, o sea, lo multiplicas un cuarto de los unit sales. O sea,
O sea, 12.500 por un cuarto, ¿no?
Ajá, pero eso sería para el segundo cuarto. O sea, para el primer cuarto.
Sería así, esto es igual a esto.
Ajá,
por,
exacto.
Por un
Por
cuarto, decía.
25%.
Así.
Ándale.
Y
Y
no
ahí
van a
en el 2001 de abajo
Ajá.
es igual a lo que querías que te quedara de ending. O sea, es igual al 2000 del Q1.
Es igual lo que... Ah, ¿verdad? Sí, es cierto. Y así queda, ¿no? Entonces, si se supone que si lo arrastro... Bueno, Y dijo que ya era un número específico, ¿no? Era 4000, creo.
Sí, son 4.000.
And why is 4,000?
Wow.
Y
Profe, avisa que la espanta.
Teacher,
Sí, estás bien así.
¿sí?
1.625.
¿Cuáles son los títulos de esto? Para tenerlo como registrado.
Te mandé foto.
El primero es el Units Forecast de lo que van a vender. Después es el Finished Goods Inventory.
Ajá.
Después es como el total del period required production.
Ujú.
Después son las que tenías del inventario anterior.
Ujú.
Y ya, o sea, las que debes de producir.
Ok. Ah, ok, ya. Entendí más. Y ya hacemos lo mismo con el de abajo, ¿no? Pues el de abajo tenemos 1500 que es de Units Forecast. Joder, lo copio, lo pego. Luego Finished Goods. Venía en el Word, ¿no? Era 2000, ¿no? ¿Cuánto era?
Ay, no me acuerdo. ¿Alguien
¿No era
tiene
el
el Word
13?
abierto?
¿El
¿Mande?
cuál?
Sí, lo tengo. Ah, déjame, es que estoy compartiendo nada más el Excel. Déjame, les comparto mejor pantalla completa.
Son 2000, ¿no?
Pantalla.
Porque, o sea, dice que al final
Aquí lo
ya es
tengo.
cuando cambia, que supongo que vamos a tener que hacer otras tablas.
Mm,
Okay, so guys, I'm seeing you're doing great. But I'm going to close the breakout rooms so we can move to the next one. But you are good. And as I told you, if what you don't finish in class is gonna be homework. Okay, so don't worry.
ok.
Ya.
De terminar. Ajá.
Ok, y entonces, ahí entra el profe.
¿O se equivocó el profe o nosotros?
No me equivoqué.
O
Where did I get it
no
wrong?
sé.
Bueno,
We're
no
reading.
tenemos duda, profe. Ah, bueno, sí que usted dice.
Si quieres, tú dile.
Bueno, es que, o sea, en realidad no entendimos bien qué poner. No, pero sigue proyectalo.
Okay, yes, projected, please.
Es que iba a proyectar lo del caso. Es que no supimos bien qué poner en lo de, aquí en lo de ending finished goods, porque supone que es lo de diciembre, ¿no?
Okay, where?
En lo de ending finished goods, se supone que es lo de diciembre, ¿no?
Yes, it's December for the last one. December will be the quarter four. Like if you were to put months, like months names inside the where you have Q1, Q2, Q3, and Q4.
Uh-huh.
You have January, February, March in the first one. Then you have March, April are the next ones. Well, the next three, you know, and the last three will be October, November, and December. And that's where you find the 4,000.
With the ending of the first quarter, not the finish of the previous.
No, it's not the finish. That's why I don't remember who had the question and I saw the error. It said 2020, but it's actually 2021.
Sí, yes, but... Ah, ok, ya. Pero entonces aquí más bien serían... Es que no estoy confundida. Aquí más bien serían 4,000.
Where? Because
No,
I'm
eso
not
lo
seeing...
calculamos.
No,
4,000, ¿no?
Es un
Acá
cuarto
4,000.
del inicial.
the last one will be 4,000. The initial will be January.
Y aquí entonces se supone que sí sería el de January, que sí son los dos 2,000. Entonces sí está bien.
Yes. Okay, so you're doing great, guys. Okay, we're gonna close the breakout. I'm going to close the breakout rooms. See you on the main station.
Okay, bye, thank you.
Hello, guys. So you all did good. Some of you took a little bit more time to do it. We all got to the same result. So again, I'm gonna show you my answer. As I told you, you don't need to do the tables like this. You could actually do it like in the book, like this, you know, and you will get to the same result. But again, when you are building the balance sheet, it's gonna be easier to evaluate this. You see, I have the values here of the finished goods. Once I evaluated the unit cost, I just need to multiply it, and that's it. I have it there. Okay. So the next one, before I move on, is there any question, guys? Because remember, what we don't finish on class, you're gonna have it as homework for the next week.
I have one question.
All the
It's more convenient if we make two tables, right? For the production budget, one for product X and one for product Y. That's
Yeah.
what you showed us in your results.
That's why I have two, because there are two products, and again, then I'm going to add them up. Where if I have them separate, all I need to do is just, for example, if I need to add these two up, all I need to do is do this, and that's it, you know. I can take the value to the balance sheet. But if I were to have them like I used to have them like this, then when I need to add them up, I have like I have them mixed, you see. And when I need to add them, I need to take like this one plus this one, and then this one here plus, and it's just a mess. If you want to do it like that, that's okay, that's up to you. What I'm going to be grading as delivery for the evidence is going to be the financial statements.
Okay.
But it's easy if you do it like this.
Yes, of course. Okay, thank you.
Okay. Great, so let's move to the next one. And the next one, it's raw materials. It's exactly the same formula. Now, the thing is that we have a bunch of raw materials there that we need to check. What is the same? It's the same formula that we did for production budget, right? Like the same formula that we use for production budget, which is to add something and then to add and subtract the inventories to something. It's the same we're gonna do here. The difference is that we are not going to be using we're not gonna use the sales volume. We're gonna use the result from the production budget. We're gonna use the production budget to this one. So let's see it step by step. First off, where's my pen? Okay, it's here. The raw materials, this is gonna be the budget of purchase for raw materials. And the first thing you need to do is actually you need to know what is the budgeted production, the raw material required for production. So you need the information of how much raw materials per each unit you need to work on this budget. And I ask you guys, is there inside the business case the information of how much of each of the raw materials you use or you need for each of the products? Like how much of each raw material you need for each of the products. This is my question. So is the information inside the raw case?
I think it is, but I don't know. I don't know if it's 0.8, where it says like the units produced, the unit price, and the cost.
Yeah, it's here.
Yeah.
It's paragraph 8, exactly. Yeah. Great. So who was speaking? Sorry, and again, I don't know who's speaking because as I don't have my camera on, I don't have that thing when it lights on. So let me see if it's working now. No, it's not working.
Georgina.
Okay, so Georgina, thank you. Did you all of the other all of you guys, other than Georgina, did you also find the production cost? The how much of each raw material you need for each of the products?
Yes.
Yes. Well, if you didn't, it's the paragraph number 8. Yes, in English. Okay. So now we need to work on the budget for the purchase of the raw materials. So it's just 2 steps, 2 following steps. The second step is actually to do and apply the same formula that we apply for the production process. That is instead of sales, you're gonna use your production budget, production budget. All right. Then you are going to, of course, this needs to be, well, it's in units, right? So you want to have it like that. Then you need your ending inventory. So it's a ending or final inventory. And then you have the initial inventory, and this is going to be negative. So it's this one plus this one minus this one. It's going to give you the raw material budget. And this is going to be on units, all right? So how do we end up with the raw material budget, the purchase of raw materials? Well, you just take the units of direct raw material and you multiply by the price. And again, do we have the price for each of the units?
Yes.
Yes, we have it. It's also in paragraph number 8. So let's see an example. In this example, I have for the wallets and the bags. Well, this should be wallets here. I have that I need of leather and covering. I need this amount per unit and this amount per unit. And then I have my estimated inventories on units, which is square meters here. And I have the price per square meter of each of my raw materials, okay? So in the case, just think about this as product A, B, and as raw material A, B, and C, okay? I have 2 here only. So the first thing I need to do is that I need to start with the production budget of each of my products. So let's go to the production budget. I have it here. I'm gonna erase all of this, and I have that for product wallet. What I have are of production budget is 520, and for handbags I have 292. So this is the thing that you already built from. That's the one that you already have, right? That's the production budget you already built. So you take that information and you put it. I'm sorry, you take that information of production. I'm sorry, I'm gonna take some water because I am. I'm really sorry, guys. I've been speaking since 7 a.m. Okay. So you have your production budget, and then you have the consumption of raw materials per unit of production. So we are going to apply something that is called standard costing. And then the standard costing is, if you remember your classes I think the name of the class is Financial Management in English and Dirección Financiera and in Spanish. You remember that class, standard costing is actually multiply the drivers of the cost times the units. That is, the driver of the cost, which will be this one, is how much of each raw material is used per unit. So right now we know that the raw material used per unit in this example is this one. Well, it says square yards. Think of it as square meters because I changed that, but I don't know. I didn't change it here. So don't worry about that. It's square meters. So I need to produce 520 units of leather. And I'm going to take that from, I took that, I'm sorry, from my production unit, from my production budget. That's for the wallets. So what I'm going to do is I'm going to multiply the leather and the lining times what I'm going to be using per each product. So if I go to my information, I know that for the budgets, I need for leather 0.3 square meters per unit. So if my budget is 520,000 for wallets, all I need to do is multiply this one times this one, all right? To get the units of leather that I want as budget. And then for the covering, again, I have the 520,000 here. All I need to do is just multiply by the estimated usage of that material in covering, okay? And I do the multiplication. 520 times 30 is that one there, and 520 times 10, 0.10, I'm sorry, times 10 is there, all right? So it's this one here. And I get the required material, all right, for each of the products. So if I go to leather and lining, which are my two materials here, I have wallets and then I have handbags, and I have the 156,000 here, and I have the 52,000 here. All right. So this will be the estimated raw materials used for this one. Okay. And as I am doing it for raw materials, I put the same raw materials for different products in the same line. So I do the same exercise with the handbags, and that is, well, this will be wallets, and this will be handbags. And again, the formula, if you want to look for it, I mean, if you want to see like as that, it's the standard costing formula. That is just the units times the cost driver, right? Our cost driver, it's in this case 0.30, and in this case 0.1, in this case 0.25, and in this case 0.50. We don't need to calculate them because they are given values to us, so we just need to multiply them. Once you have that, then you have the total, once you have that, then you have the total production related with the sales, all right? Which would be these two. That's the production budget that you have. And I say it's related with the sales because remember, the production budget starts with the sales budget. So once we have that, all we need to do now is just do the same thing that we did with the other one, and that is add up the initial inventory, which will be this one here, the ones that add up the ending inventory, which will be the inventory at December. It's this one, the one inventory, that's the final inventory. Add it up, it's here. And then you have the total raw materials that you need. And then the next step is you need to subtract. Again, it's the same as with the production units. You need to subtract the initial inventory, which is this one here, okay? Initial inventory. And this final or ending inventory, that will be the same. That's 80,000 and 50,000, okay? The difference between those two is the total raw materials to be purchased. Total raw materials to purchase, and this total raw materials needed, all right? And how do you evaluate the purchase? How do you end up with the purchase budget that is with money? Well, all you need to do is just multiply your total raw materials purchase units, because these are units, times the price or cost, per unit. And that, again, we have it down here, okay? So we just multiply those two and we end up with the purchase budget. Now, I'm really scared because no one stopped me and asked anything. So you are either understanding everything, or you are not understanding anything.
Christopher, I do have a question.
Uh-huh.
Do we have to do all of this for every quarter, for every, well, unit X and unit Y?
Exactly, and for every raw material. There is no time to go to the raw cases. I mean, I'm sorry, to go to the breakout rooms. So you don't need to do it now. Also, it's not homework. If you want to do it, it's gonna be better for you because you're gonna have less homework during the weekend. But anyway, we are gonna work on it on Friday. All right. And again, whatever you don't finish on the class, you are gonna do it during the weekend. And these are the most difficult part of the budgets. So I'm pretty sure we're gonna finish them on next class. I'm gonna show you how I did it in case you want to do it. But again, it's not homework. So if you don't do it, it's okay. I have here the 3 different separate tables, each one for each of the products. I mean, each one for each of the raw materials, all right? And then inside, I have the 2 products. And why is it that I can combine these 2 here? Well, because I know for my paragraph number 8 that the 2 products actually share materials, you see? So for example, product X and product Y share material A. Material B is only used by product Y, for example, so that should be only for product Y. And C material is used by both of the products. So I'm gonna mix them, if you will, inside the same table, because I know the information allows me to do that. And again, what I need to do is that I need to multiply. I'm gonna do this. So you see what I multiply. The first part, remember, is that we need to find out how much of each material is used by each product. So I'm going to multiply my budget of production here for X units times the usage of material for X units in A food, which is the part that I'm using here. And that gives me 8,000, you see? Very easy. And the next one is the same. I'm going to multiply well, in this case is Y. Let me erase the other one so you don't get confused. So I'm gonna multiply my production budget of Y units in this first quarter times the usage of the Y units. And that's gonna give me 500, okay? The addition of those 2 is the unit sales forecast related with the sales, with the production budget, okay? So all I need to do now is just, well, again, you do the same thing that you did here, because there is also an instruction that you need, here is a quarter, here is 20%. So you multiply 20%, all right, of the next one, that's what you have here, and then you just need to add them up. You take the inventory, the initial, which is there, you subtract them, and you have the total period production budget of raw material, of raw material A. Then the multiplication of raw material production budget A on this quarter times the price, which is 0.25 cents, is gonna give me my inventory budget value. That is my production. That is my raw material budget, okay? So that's how you do it. It's not homework. I'm gonna review it again next class, and you are gonna do it on the breakout rooms. If you do it, I mean, I do recommend you do it as homework, because you will advance on the activity class and you won't have as much homework during the weekend, okay? Well, if you don't do it, it's okay. We're gonna work it on Friday. So do you have any question, guys?